MG, making moves, flipping real estate. We building wealth, get your minds right and elevate. It's the mortgage king, we do it truly, bro. Dropping gems like a thief up in the jewelry cell. Wealth building equity in real estate, the mission. Collaboration is greater than competition.
YouTube, what's going on? Matt Garland here, NMLS number 58700, but better known as MG the Mortgage Guy. So look, man, first of all, thank you guys for supporting the channel. As of yesterday, May 9th, Mother's Day, my channel now has 1 million views. I wish we had some type of sound effects in here, Tooks. Like, we need some hand clapping or something right now, right? But that might not seem like a lot to a lot of people. But for me, that is a lot. So first and foremost, I want to thank all of you guys for tuning into these rants and these gems, you know, and everything that I got going on. I appreciate the love. I appreciate the support. I appreciate every single last one of you who come on here and like, comment, whether it's positive or negative, even the ones who's disliking the comment. I don't know why the hell y'all disliking anything that I put out, because everything I put out is facts. But thank you to the haters too. I appreciate y'all for disliking the video. So if you're new here, thank you. If you've been here for a while, thank you. I started my YouTube channel, I think March of 2019, guys. I had 0 subs. And like most people, I've been on YouTube, I think since 2010, 2011. But even myself, I use YouTube just like you guys used it, as YouTube University, right? I came on here to learn about things or just to watch videos. And like my kids use YouTube. I got 3 children, so, you know, YouTube is basically their television. They don't even watch regular cable, which I love. It saves me money. But in 2019, I decided to, you know, start putting out content here. And I had 0 subs. And today, I think we're almost at 50,000 subs. Now, I took a break from YouTube I think like August, September of last year, of 2020. And I took a break. I stopped putting out, you know, content. I stopped putting out information. And I just got back started again, I would probably say March, April of this year. And in the last 30 days, the channel has grown. I mean, we had about 12, 13,000 new subscribers in the last 30 days alone. So I appreciate that, man. That just shows the content that we're putting out, you guys like. So my goal is, like I tell you guys, almost every video, my goal is to make MG the Mortgage Guy YouTube channel the #1 resource for real estate with a keen focus on real estate financing. Because look, let's face it, anybody nowadays can sit in front of a camera, have a good setup, read stuff, and basically be an influencer nowadays. A lot of people don't talk what they live in, and I think we all know that right now. And there's a lot of people here on YouTube, and there's no disrespect to nobody, because I think a lot of people are out there just trying to push good messages out there about home buying. But there's a lot of folks out here that just don't originate loans. It's just, it is what it is. People are not originators. They haven't originated a loan a day in their life. But you see a lot of content out here from non-originators. So one of my goals is not only to give you guys the real information, especially when we're talking about real estate financing, right? To give you guys real information, because I originate every single day. And I manage a mortgage team that helps a lot of people on a monthly basis. And that's coming from a real perspective, because I'm active. I'm actively talking to clients. I'm actively helping people, you know, reach the closing table. So I want to be able to give that knowledge to you guys, like firsthand, from a lender's perspective, you know? And also I want to encourage licensed loan officers and licensed realtors to really get out here and really start talking and teaching about their subject matter expertise, right? A lot of loan officers are so talented. There's a lot of talented loan officers out there, but they don't put out no content, you know, for one reason or another. And I understand their reasonings, but I want to encourage loan officers to be out there, especially folks who look like me, to go out there and educate at a high level, because these platforms, from YouTube, Instagram, Twitter, Facebook, TikTok, Snapchat, whatever it is, whatever, LinkedIn. Educate, guys, educate, because it's selfish if you don't, right? We have a lot of knowledge up here about real estate, and us loan officers are usually, buried under a bank's brand. You see what I'm saying? And I want to trailblaze that. I want us to be at the forefront. I want us to be the one that people know, not the banks, because they're not doing business with the bank. They're doing business with us. So hopefully my videos will encourage more loan officers to go out there and really start originating at a high level. All right, so that's my little opening speech. So today, we ain't gonna be on here all day. Tooks, make this a little bit bigger on my screen so I can kind of like see the comments a little bit. A little bit bigger. Yeah, that's perfect. That's perfect, because I don't need to see me. Yeah, so today, shout out to everybody who's on Instagram with me also. Shout out to all of y'all. So today we're going to do a Q&A. So I want to bring some folks on here. And everybody who's on there right now, please hit that like button, smash the like button, smash, and comment. And if you have any questions, I would like to invite you to come on with me. If you're going to come on with me, here's a few rules. You must have headsets on. If you don't have a headset on, please don't come on, because your sound is going to be echoey. All right, so you have to have some sort of headset on, and please turn off the YouTube when you come on, so that way you don't have no feedback. That's number one. And please be in a quiet place or have some good lighting, so that way we can see and hear you clearly. All right. Yeah, if you guys have any questions, and I try my best to answer as many comments that I can, but if I miss your comment, all you guys have to do is text 516-217-2291. Again, 516-217-2291. Y'all see it going down there. And you can always text that number if you want to apply for a loan. If you're currently in the process of purchasing or refinancing and you want a second opinion, all you have to do is text that number, or in the description, you have all the links where you don't even have to text the number. You can just get on the calendar directly. All right? I would love to help you guys achieve your real estate goals. So let's get some Q&A going before, let's take some of these questions.
All right, let's start. So congrats, we'll start with the first one.
Okay, can you talk about self-employed people home loans? Need some guidance. Rita, why don't you come on? Because it sounds like you got some self-employed is too general. You know what I'm saying? So like, Rita, if you want to come on, please feel free to come on, because there's a lot that I can talk about with self-employed. If you have, a scenario or something, I'll be happy to help you. But please feel free. The link is in the comments if you want to come on.
Okay.
All right, so the question is, yeah, I see it. My grandfather owned a broken down row home in Philly. Can I use an FHA 203K to convert it into a 2-unit rental? Or since he's a family, FHA won't allow? No, you can do that. You can use the 203K. Now, you can buy it from him. He can sell it to you as a gift and equity sale, and you can do a 203K for that. So that's not a problem at all. And speaking of 203Ks, I'm glad you brought that up. The Homebuyer's Blueprint Volume 2, the Rehab Pack is coming out. Pre-sale will be launched, I think, Wednesday. We're going to launch pre-sale, and whoever gets and that course is going to launch on the 18th, I believe, Tuesday, May 18th. All right, so we're going to be discussing FHA 203K, Fannie Mae home style, hard money loans, construction to permanent loans. All right, so this course is, whoever got volume 1, you already know what it is. You already know how I give it up on these courses. Lots of information, hours and hours of information. All right, so that's dropping next week. Pre-sale will be launching on Wednesday. The link will be, on my Instagram page if you want to get the pre-sale price. And it's going to be almost free, so that way you guys can learn how to use Rehab, because Rehab to me is, Rehab loans right now are very important because homes are selling way above asking price. So you guys got to kind of start switching your direction on what you guys want to start looking at in properties. You got to get Rehab properties right now. All right, who's that? Miss Williams? All right, Miss Williams. Shout out to you, Miss Williams. She says, I have a HUD lien on my... No, you got to scroll down. Yeah, that's perfect. All right, hello. I have a HUD lien on my property due to the housing. Now, you can't move it because then that...
This comes up. It's gonna.
Oh, yeah, so I can't even see it. There it goes. That's perfect. All right, so we're testing out some new system here. So you guys are the guinea pig with this too until we perfect this. All right. So Ms. Williams says, hello, I have a HUD lien on my property due to the housing crisis in mid-2010. I would like to refinance, but I can't seem to. I have a FHA. Any suggestions? Oh, so if you have a HUD lien, you got to get a payoff from HUD. Unfortunately, HUD is backed up, and unfortunately, you're going to have to wait until you can get a payoff because no lender can pay off that lien without a payoff. So the only thing I can suggest and recommend on that, because I have a couple situations like that right now, actually, and only thing I can suggest is keep calling HUD. Keep calling HUD and harassing them because I think they told us the payoffs take like 30 to 45 days to get. It's something ridiculous. But just keep calling and harassing, and you should get it. Are Rita's back? Yeah. That's the only thing I don't like. I can't see Rita. All right, there we go. So Rita says, now she asked earlier, guys, about self-employed. So she is a therapist. She has her own private practice. 2020 grossed about $130K. Damn it. But seems I claim too many expenses. Heard from my lender, my net is too low to qualify. Yeah, so, all right, Rita. So if you wrote off all your income, then yes, you probably won't be able to qualify for a conventional loan. But you can probably do a bank statement loan where we're not looking at tax returns. We're not looking at your bottom line. We'll look at the monthly deposits. Okay, we'll look at the monthly deposits of the business, and we can use that as income. Now, one of the downfalls about a bank statement loan is that you're going to have a much higher rate than a conventional FHA, right? So that's the price to pay when you do these type of loans. It comes with a higher interest rate, but you'll be able to still go out and purchase real estate. So what a lot of my clients do who are in your same situation, Rita, they'll go with this bank statement loan, and then 6 months to a year later, they'll get those taxes right, and then they'll refinance into a conventional mortgage to get a lower rate. But that would probably be the only thing that I can suggest that you do is go that route. I would love to help you, Rita. All right, Soul Relief says, if we purchase Volume 1, do we get access to Volume 2, or do we have to purchase Volume 2 separately? Good question. Yes, you will have to purchase Volume 2 separately. It is a completely different product. It is a completely different course. But the EYL University members and Blueprint 2, Blueprint 1 members will get the pre-sale price for life. So, and it's almost free. The pre-sale probably gonna be like $99 or something like that. It's not gonna be as expensive as Volume 1 because Volume 1 is like 15 plus hours. But Volume 2 is going to be, I think right now we got Volume 2, the pre-recorded stuff, I think it's around 5-6 hours, somewhere around there. And then, but what I'm going to do with Volume 2 for the hard money sections, and this is where this course is just, this actually is probably gonna be better than Volume 1 in my opinion. Because on Volume 2, what I'm going to do with hard money lenders and construction loan segment, what I'm going to do is I'm going to have actual lenders, people that I do business with, actual hard money lenders and actual construction lenders come here, right, and come on live and discuss their products. So not only will you guys have all the information for the conventional and FHA products, right? But now I'm gonna bring you actual lenders, and I never do this. People always ask me, yo, who's your lenders, this, that, and the third. And I don't really give people access to certain things, but for the Homebuyers Blueprint Volume 2, the Rehab Pack, I'm actually gonna have the lenders come on live and do live webinars. So for example, the hard money section, we'll probably have 10 videos from 10 different lenders breaking down their actual process. You understand what I'm saying? and how to qualify for them. And so you guys can know, and you have different options for hard money. The folks who are doing construction and permanent loans and construction loans, I'm probably going to have around 10 because I know about 7 people who do those loans that I refer business to. Boom. And I'm going to have them come on live, you know what I'm saying, and break down for their bank their particular product. See, the FHA and conventional stuff is universal, so I can kind of talk about that all day. But different hard money lenders, different construction lenders want different things. So my goal with the Blueprint Volume 2 is to give you guys so much value that when it's time for you to do these type of products, you're gonna have all the sources. You're not gonna be sitting here searching. All right. So this is going to be exclusive for Volume 2 because it is a rehab pack. So whoever has Volume 1 and you're interested in going into rehab and rehab and construction loans, then you need to get Volume 2 because Volume 1 in EYL, we do a break bread like every other Thursday. So this is going to be separate from that. This is going to be specific for Volume 2 members. All right. And then also the Homebuyers Blueprint community, because EYLU already has its own private Facebook group, but the Homebuyers Blueprint is going to have a Facebook group as well, okay? That way we can see all the success stories, we can collaborate with each other and push each other within that group, all right? Because there's a lot of people who reach out to me all day long that has the blueprint, which is amazing, but we need to keep everything in one place so that way every member can kind of like push each other. So get Volume 2 when that pre-sale drop. And for EYL, like I said, EYL and Blueprint people, it's going to be $99. All right. And if you are not a member of any of these groups, then you better get it on pre-sale because the price is definitely going to go up for you. Can you do a 2 or 3K subject to? And I have Volume 1 with the blueprint. Shout out to Manny with that Volume 1. Get Volume 2 because we're going to be discussing all about 2 or 3K. Okay, so Volume 2, 2 or 3K questions. Get Volume 2. After closing on 2 or 3K, what it says, how long till you can refinance? It seems like the rates for a 2 or 3K loan are higher than traditional FHA loan. All right, so I'm going to answer that question, JH. Yes. Rehab loans are always going to be more expensive because you have that extra layer of risk to the lender, all right? So there's always going to be more expensive. That's number one. And then the Homebuyers Blueprint Volume 2, I'm breaking all of this down on how you should know what rates and everything like that it is. But once you make 6 payments with a FHA loan, then you can do what's called the FHA Streamline Refinance. And that Streamline Refinance, you'll be able to get yourself a lower rate. So let me know, JH, if you need help with that refinance. Me and my team will love to help you. Again, if you want to come on live with us, man, make sure y'all click that, click the link that Tukes put in the comments. Click the link if you want to come on live. The link is right there in the comments right now. It's about 200, almost 200 of y'all on here live with me. I need everybody to smash that like button or we're not coming back on. I'm going to start threatening y'all if y'all don't like these damn videos, man. Like the video, please. Okay, we have, let me see how many likes we got on this. Oh, y'all tripping. We got 60 likes and almost 200 of y'all. Y'all trying to play me right now. Y'all better like this daggone video. All right, what we got going on? I need somebody to come on here with me because I'm trying to test something, okay? So I need somebody to come on here so I can test this new system that we have right here so I can make sure it looks good, all right? Somebody jump on here with me. All right, who we got next? No, go back to Rita. She said, was asked to amend my 2020. What do you recommend? I can't recommend. No loan officer should be telling you to amend your taxes, right? That's first things first. But if you were to amend your taxes, then you would have to pay income tax to the IRS and probably to the state, right? Because now you're claiming a higher amount. So you have to take that into consideration also. So if you chose to do that, then it could possibly work, but I wouldn't know, Rita, until I reviewed your entire financial package to be able to tell you the good, the bad, and the ugly, Rita. Would love to help you. Link will be in the description after we get off live. Let's see what else we got. This little comment thing keep coming up. It's so stupid. All right. So Cliff Davis, shout out to Cliff Davis, says, hope all is well. With material costs rising, do you see an increase with container house or tiny house developers happening? No, not in my markets that I'm playing in. I don't see container houses. I don't see tiny houses. I see people still building. Hell, I'm about to do a massive construction on my new primary residence, and that ain't stopping me. So, no, I don't see an increase with container houses or tiny houses. You got to be, for tiny houses, you just got to be like cut from a different cloth, in my opinion. I don't want no tiny house. I got 3 kids and a dog. I need space. But no, I haven't seen it, me personally. Who does bank statement loan? I'm buying in Tampa, Florida. Rita, me and my team can help you. We can help you with bank statement loan in Florida. Like I said, link will be in the description to apply. Or you can text 516-217-2291, Rita. Text 516-217-2291, Rita. And just say that, hey, I was on YouTube Live with you. I want to do a bank statement loan to get pre-approved, and then we'll send you the information to get approved. Thanks, MG. It's worth the cost whenever it is. Okay, Sol, I think you're talking about the blueprint too. You're definitely right, Sol. It's almost free, and I'm making this one, I'm giving for the pre-sale like 90% off, $99 or something like that off top, because I want you guys, this cost to me is better than volume 1, and especially because the hard money construction, the permanent segments will be live webinars, so you guys can ask questions. And the FHA and the FHA 203K Fannie Mae home style stuff. We got some dope interviews in there with contractors, HUD consultants. Oh my God, man, I'm telling y'all, volume 2 is crazy. So not only is the pre-recorded going to be fire, but once we add in the hard money and the construction live, y'all better jump on that, I'm telling you. And he's going to have different lenders who's offering the private money, what their programs are, what they're looking for. Like, this is like no other, guys. I don't think you guys really understand what I'm going to do for you. Like, let me not say no more. It's either you're going to get with the program or you're not. Hey, woo, let's go. All right, so Adrian G says, you see that? How do we access the blueprint on EYL? I can't find... Damn this comment thing. They got to do better with that. How do we access the blueprint on EYL? I can't find it through the search on the new site. No, yeah, so Adrian, do you have access? All you have to do, Adrian, if you don't have access directly to the blueprint, email Janet. That's all you have to do. Email Janet or text me, 516-217-2291. And then just text me your full name, tell me your earner, and then I can get you on the blueprint. Somebody's here.
What's up?
Make it larger. Pause. Yo, my guy. What's poppin'?
What's up? You keep asking everybody to come on live. It's like they scared or something. Let's talk to you.
I don't know why, dog. Like, this is the best way to kind of have this type of dialogue. I don't know why they don't jump on here and take these opportunities. Everybody want to have a consultation. This is basically a consultation in front of the world, basically.
Yeah, for sure.
But what's up with you, dog? What's going on?
Question for you. Since I already have a conventional loan, right? And so I am, like I told you on a couple episodes, I have my basement that I'm renting to get rental income, right? So when I go to apply to buy another house in like the next year or two, do I need to show that? Do I need to have that rental income on my taxes for at least 2 years?
If you want a good question. So, all right, guys, the question is, he has basement income, right? He's renting that out, and he wants to know if he uses that income and reports it on his taxes, will he be able to qualify? If it's showing positive income, then yes,
Okay.
you can
Oh,
use it
okay. And another question.
for 2 years. Yeah,
Okay, just for
Tooks,
two
you
years.
paying attention, Tooks? Yeah, Tooks. Yeah, 2 years.
Okay, 2 years. All right. And another thing is, since I already have a conventional, could I use that income and get an FHA loan while having, like, can
So
I have two loans at the same
can you
time?
so if you're now going to leave the house that you're in and buy a
Mhm.
new primary residence,
Yes.
yes, so you can use departing rental income. So in your situation, right, if you're going to move out of this house and buy a new one,
Hmm.
honestly, I wouldn't even use the basement rental income because your top floor, the whole house rental income will be a lot more. So then I can use your departing rental income from the full house to kind of wash out that mortgage so that way you can qualify for the next one.
Okay, so do you think it'd be smarter to go the FHA route or the conventional route, or does it depend on how much money I have to put down?
Correct. It depends on how much money you're looking to put down, the property type of the next home, where are the interest rates at that time, what's going to
Okay.
be the best tool for you and your family to achieve that next piece of property.
Okay. Another question. I ain't trying to take up all your time. It's my
Nah,
last
go
one.
ahead, bro. This is good. You're
Um,
asking really good questions. I
so
might clip
could,
some of this.
okay. Could I move from a almost a single family to maybe like a duplex or a triplex, or would that look bad and under underwriting? Like they'd be like, no, he trying to do something else.
Well, I mean, you got to look at your house, right? Your
Hmm.
house is kind of spectacular.
Yeah.
You know what I'm saying?
Yeah.
So now, the question is going to be if you're going to, from this beautiful house that you have right now, which is absolutely gorgeous, to this three family, what sense does this make, right? Is
Hmm.
this, are you guys downsizing? Are you, basically, are you downsizing? Like, what's the reason, right? What's the
Okay.
motivation behind it? Because they're going to look at your current residence. They're going to see that. They're going to see how beautiful it is. And that's going to be the question is like, yo, are you trying to commit occupancy fraud? Are you trying to just buy a true investment property with a program that's only for primary residences? So that would probably be a little tough.
Okay.
But from a one to a duplex, possibly, because your area is so expensive
Hmm.
that it could probably make sense doing it that way to say you're trying to offset your costs and depending on how much the market is to rent out your property, it could make sense, but it really depends on the location, how big is this duplex, and school district compared to where you live,
Okay.
things of that nature. So like the overall motivation has to make sense to justify you using an FHA loan for your second property when you're going from a one family to a multi.
Okay. But do those same rules apply even if I want to use a conventional? Because it's to me, it's all about the down payment.
While conventional, if you go multi, you're gonna have to put 15% down minimum.
Oh,
Yeah, so conventional, you're not putting down 3 or 5%. Conventional, you're putting down 15% minimum for a multifamily.
so which loan did I use? Because I put remember you actually.
One family,
Oh, okay,
one family.
okay,
You know what I'm saying? So
okay.
you did the one family with I think 5% down,
Hmm.
and now you go once you go 2 to 4 family, 15 to 20%, just depending on the program.
Even if I'm living there?
Correct. Even if you're living now.
Oh, okay.
FHA besides VA and US besides VA, VA is 100% financing from 1 to 4 family. FHA is the only program right now besides VA that would do 3.5% down on multifamilies. NACA would do 100% financing also on multifamilies, but again, you're not a first time home buyer, so that wouldn't work
Oh,
with
okay.
NACA. So your ideal if you're trying to do a duplex or something like that would be FHA, but again, you got to have that motivation. Now, even for a conventional loan, underwriter is still going to ask why you're moving from a one to a two, but since you're putting down 15 to 20%, it's they're not going to scrutinize it as much as it would be with an FHA loan. But it still would get scrutinized, but FHA would definitely get scrutinized because you already have this property.
Okay. And I guess, again, I don't know if somebody's going to ask this, but can you explain to everybody almost like why you told me to go conventional instead of FHA? And I knew it was a bunch of fees associated with the FHA, so it's not always the best route to take.
Well, in your situation, when you're doing a one family, right? I'm always conventional first with one family. If your debt to income, your credit is there, and you're doing a one family, conventional is ideal, right?
Okay.
Versus FHA, because you have the ability to remove the PMI. You don't have the FHA upfront fee. So it's a little bit better deal. And with the rate, where the market was at that time, it just made more sense for you to get, that jumbo loan going conventional versus doing the FHA. Now, there are situations, many of them, where I can't get someone approved for a conventional loan, even if they got a single family house, they have decent credit, but sometimes their debt to income ratio might be too high, and then we can't get them approved for the conventional, so then we have to flip it FHA. If we're
Okay.
talking multifamily and people want to put down minimum down payments, automatically FHA is the program that, that I offer. And then I show them, okay, if you want to go conventional, then you got to put down X. And 9 times out of 10, they go with the FHA. But the biggest misconception, right, is that people think FHA loans are hard to get approved for when it's actually the opposite. Conventional loans are much harder to get approved for than FHA. But people just don't realize that.
Yeah.
But
So,
in your situation, it just made more sense.
okay. And what about using the FHA? Because currently I live in DC. What if I move to Virginia for like better
Got
school system and more property? Would that kind of pass with the underwriting?
Absolutely. Just got to make
Okay.
sense, right? So now, how far in DC? You going northern?
Right now I live in Southeast DC. So if I
So
were to
you live in
move to,
Southeast, but you're going to go to northern VA, right?
yeah,
Yeah, so I mean, from a price point perspective, you're going to a different state. Even though northern VA and DC is kind of like one a little bit,
yeah,
because it's like right there. But that can make sense, absolutely, because like you said, you'll get a bigger house, bigger yard, bigger land, so that could make sense.
okay.
But that's
And
one family to one family. You see what I'm
yeah,
saying?
yeah,
That's easy. Now you go one family to two. That's when it gets a little like, what are you really trying to do here?
so I think I may have messed up because I originally wanted to do your 4-3-2-1, but this house came up and it was too pretty, so it kind of messed up my investment strategy a little bit. But
You was an emotional home buyer. I get it.
I was, I wasn't, firsthand. I was very emotional.
And I told you, I said, yo, bro, you say your goal was this, but you're like
Yeah,
moving forward with this.
yeah,
But you the boss.
yeah. Okay.
But
All
these
right.
are your challenges now. You made your bed. You laid in your bed. Now you got to make it.
For sure. For sure. It's a nice
You know,
bed though.
it is
Um,
definitely a nice bed. Pause. I ain't gonna hold you up. Your house is beautiful. I ain't
all
gonna
right.
hold you up. That house is beautiful.
Okay, and last one, and then I'm done. With equity. So how would I go about trying to pull equity out in order to buy a new property? Like, what's the process? Do I need to get it appraised? What would I need to do?
How much do you think your house is worth now?
Right now, I looked at it the other day. It was worth 761, and I bought it for 660, and I paid it, and I've been here. Juneteenth would have been a year.
So you damn. So you almost up 100K in a year.
Oh, I'm up over 100K. Yeah, with after paid down.
Yo, y'all need to drop like a fire emoji in the comments for my man Justin, who over 100K, and we didn't even hit Juneteenth yet, y'all.
Yeah.
Like, I keep telling y'all need to stop waiting and stop procrastinating and stop waiting for market crashes. You got real people out here making money. You know what I'm saying? Making money. But equity is monopoly money. It's not real
For
until you
sure.
pull it out.
Yeah.
So in your situation, since your interest rate is so good, I
Hmm.
would not touch your first mortgage. What
Okay.
I would do is I would do a home equity line of credit.
Okay.
And then you can probably pull out 30, 40 grand of that money.
Okay. And would I need to talk to my particular
I would go
the
with a
holder of my
local credit
loan?
union.
Oh,
Nah,
okay.
go to a local credit union.
Okay.
Local credit unions love home equity line of credits. They always have good offers on home equity line of credits. So I would definitely 100% go to a local credit union to do your home equity line of credit with.
Okay.
Or like a local, like regional bank.
Mm-hmm.
You know, those two types of banks, like that's just to your market, you know what I'm saying? Or a credit
Mm-hmm.
union. That those regional banks, they typically not nationwide. They only want to work with people in a certain area. Those banks will always want local business because they want deposits, they want investments, they want business accounts, they want your money, right? They want that relationship. So they'll always offer some sort of terms or specials and things like that to get that local business. So I would
Gotcha.
go with one of those two banks for your home equity line of credit. And everybody, whoever got equity, you want to take out a line of credit or something like that, local credit unions, local regional banks, those are the ones. Dang some carrot in their eyes. Like, hey, I
Okay.
got 100 grand here. I got 50K here. What can you do for me? If I open up an account and take out a line of credit, they love
Okay.
that.
Okay. Okay. And would that HELOC count as like a would there be like a second lien on my property?
Cor- Correct.
Okay.
It'll
Okay.
be a second lien on your property. The HELOC is typically for 10 years. 10-year draw period with a 20-year with a 30-year payback, right? So it'll be amortized over 30 years. The first 10 years is when you can draw from it. So it works like a credit card, so to speak. You use it,
Okay.
pay it off, use it, pay it off, right? And you can keep doing like that for 10 years. And then after the 10 years, it becomes like 20-year term. And depending on what you signed, that would determine what the rates and everything would be at that time. But the
Okay.
goal would be for you or anyone is to try to pay off that line of credit within that 10 years.
Okay. All right. Okay. That's all I got for you.
All right, brother. Whatever I can do to help, let me know. Thank you. I appreciate you as always, man. And I can't believe you up over 100K, bro.
Yes, sir.
Over 100K in less than a year.
Yep.
You better go take that money.
Yeah, I know that's what I've been debating, but I didn't know how to do it yet, so that's why I wanted to ask.
Nah, don't debate no more, bro. Take it. Take it and run before market correction.
Okay.
Take it.
I bet.
Thank you, brother. I appreciate you.
Appreciate you, MG. All right.
All right, bro. Shout out to my guy Justin in the building, man. Justin, a good dude. Y'all see that? Over 100K, and he closed last year with me on Juneteenth. It's not even Juneteenth yet. It's not even a year. He's up over 100K. Y'all better get off the fence. Stop waiting. All right, who's this? Jared? Let's get Jared in here. Jared, what's going on, brother?
Hey, what's going on, man? Appreciate you having me up here.
No doubt, bro. Anytime, man. Where you from, dog?
I'm from Queens.
Queens, get the money, man.
Of course.
What's
So,
going
yeah.
on with you today?
All right, so right now I'm actually in the process of looking for a house. So I got pre-approved for a SONYMA loan. I'm not sure if you're aware of it.
Yes.
But I kind of feel like they lowballed me a little bit. I got approved for 460. I'm trying to find something in the Queens area, like a duplex. So right now I'm renting, but I'm trying to get into real estate, some real estate investing. Cause I'm just trying to pivot my career from what I'm doing now and just get more into focusing on that. Just wanted to know what are your thoughts on far just what do you think I should do? So I also was in the process of trying to find out if I should get an FHA loan, but when I was speaking to a lender, he was saying that with the SONYMA I could avoid mortgage insurance. So I just wanted to know, like, what are your thoughts on my situation and some things I should look into?
So sounds like he was trying to do a SONYMA conventional loan.
Yeah.
You won't avoid mortgage insurance unless you put money down, or they're probably going to take that $15,000 and use that to pay off the mortgage insurance up front.
Okay.
Because you can, with conventional mortgages, you can pay a lump sum of the PMI and it won't be on a monthly basis. So what some loan officers would do with that program, they'll just use that $15K for the PMI and say, hey, you will have no PMI, right? But you paid for the PMI. SONYMA is a PMI-driven program, just like any conventional loan. So unless you put down 20% down payment. Now, they probably did lowball you because when it comes to SONYMA, you can't exceed certain loan limits for multifamilies. Now, if you do SONYMA, like I do SONYMA loans, but in all honesty, I don't do the SONYMA conventionals no more because there's a lot of restrictions. What I like to focus on with SONYMA is the SONYMA FHA Plus loan. So the SONYMA FHA Plus goes off of FHA guidelines. It doesn't go off of SONYMA guidelines. So if you can qualify for a 2-family for $800,000 and it meets FHA guidelines, then you can get approved for that and get $15,000 that you can use towards closing costs because it has that SONYMA down payment assistance. So you can use it for down payment or closing costs. So that's the version of the SONYMA loan that I do a lot of because it's just less restrictive. I control the underwriting, so all the underwriting is done in-house. I don't have to send it off to SONYMA or Genworth. Genworth is the company that does PMI and underwrites for SONYMA. For conventional mortgages. So that's why I like the SONYMA FHA Plus program because it gives you a lot more flexibility and you still get that $15,000. So 400 and change is nowhere. It's not even enough for a single family in Queens. Like you barely getting a co-op in Queens for like $400K. So if you want to get pre-approved with me and my team, bro, I love to help you. Show you all the options. That way you can see what it looks like with a regular FHA loan versus the SONYMA FHA Plus. And then, I just put somebody in today in Brooklyn. We were going back and forth between SONYMA FHA Plus and a regular regular FHA with a lender credit. It's a $900,000 deal. So the rate on the SONYMA FHA Plus today, I think is like 3.75%. And this is a jumbo loan, guys. So the rate's always a little bit higher with jumbo. But with regular FHA, with giving her a 1% lender credit, which is $9,000, I was able to get her like 3.125 or something like that. So it just made more sense for us to do the regular FHA, still give her $9,000 towards a lender credit to make that deal work.
Okay.
So look, if you 516-217-2291, text, tell me you was just on this live with me, and I can send you all the information to get started with the process, and I'll love to help you.
All right, sure. And one more question I have for you. So not too long ago, you was just talking about HELOCs. So my mother has a house, and I was actually trying to get her into real estate investing as well. I was trying to just tell her that she has equity. She has a lot of equity. So far as just the HELOC, what is the process for getting a HELOC, and what are the advantages against refinancing versus HELOC?
What's her current interest rate?
Right now, I'll have to double check, but I remember she had the loan for quite a while, since like the 90s, 99.
So in her situation, since she's had it damn near 20 years, over 20 years, I should say, I would probably, if her rate is not astronomical, I'll probably say let's not touch the first mortgage and probably just do the home equity line of credit. Now, she'll have to credit qualify for a home equity line of credit, so the lender will need to review, her credit, her income, just to make sure her ability to repay is there. So it's like any loan, just like how you're getting pre-approved and everything, you got to submit your documents, run your credit. It's kind of like the same process. Okay. But now, once she gets approved, and for her, I would probably tell her go to like the BEF page or something like that. Mm-hmm. BEF page does HELOCs. They have good rates. PNC does HELOCs. They have pretty great rates too. So I would probably say go to one of them, see what their terms are, what their process is, and see how much she'll be able to get approved for this HELOC. But same thing, it's 10-year draw period. She can use it, pay it off, and then after 10 years, it turns into a 20-year term and she'll have to pay it all off. But I try to advise everybody, pay it off within that 10 years. So, because sometimes that payment goes higher because now you have principal and interest, but in the first 10 years, it's only interest only when your payment statements come. Okay. So the payment's cheaper.
Okay. Yeah, that's all I got for today, man. I greatly appreciate it, bro.
No doubt, man. Anytime, man. Whatever I can do to help you, man. Just let me know. And like I said, if you want to move forward and see if you can get more money, shoot a text 516-217-2291 or link will be in the description after this video.
All right, I'm going to text you right now.
All right, brother. Thank you, man. I appreciate you.
All right.
All right, guys. We've been on here for 44 minutes right now, man. We got like 250 plus in here live with us. I need y'all to hit that like video, man. Hit that. I said hit the like video. I'm bugging. Hit that like. Smash that like. Smash the like button. Let's go. All right, who we got over here? We got Sibo. Sibo, what's popping? He in the Matrix?
Hey, what's up?
Sibo, what's
Man,
going
I'm
on, bro? I'm good, man. It look like you in the Matrix right now. You like
good. Hey,
your
bro.
Wi-Fi. Something's going on here.
Oh man,
Yeah,
I
to
got
see.
my Wi-Fi acting up out here.
Yeah, your Wi-Fi. You keep going in and out, dog. You gotta get on good Wi-Fi.
Is it any better?
Little bit.
Hey,
Yeah,
can you
you
hear me?
still kind of. I hear you, but like seeing you is kind of
Yo,
like you're frozen. Yeah, he's frozen. Take him down and let him come back. You're frozen, Sibo. You got to get on a good Wi-Fi so that way you won't. Because I can't hear you. You're going in and out. You're freezing. I couldn't really hear you. Somebody said that's that Brooklyn Wi-Fi. Don't be disrespectful to Brooklyn. Y'all rooting out of all. Sibo, he looked like his thing is moving good now. Let's see if he can come back on. Nah, it's still in the Matrix, Sibo. All right, guys. Link is in the description. Tooks just put there. Anybody give super chats? I think I saw one or two of them. Let me go. Let me shout out whoever did the super chat. Oh, you got the description up already? Tooks be working. All right. So, shout out to the super chat. Los Way, you have a course I can buy to learn all of this? Yes, Los Way. Homebuyers Blueprint Volume 1 is out right now. It's been out for like 6 months. It's an amazing course, over 15 hours of information, the A to Z of home buying, teach you everything you need to know. And then also we have now Volume 2, which is rehab loans, coming out next week, Tuesday. 516-217. Whoever wants 80% off the Homebuyers Blueprint, text the word blueprint only to 516-217-2291, and you'll get the automatic link to give you 80% off the Blueprint Volume 1, and that will ensure that you get the really good price with Volume 2. All right. Who else we got? So shout out to you, Los, for the super chat. I appreciate the love. Nina Williams, turn your camera on. Nina.
How are you?
I'm alive and blessed. How are you?
I'm good. Thank you for taking my question. Appreciate your time.
Anything for you? Where you located?
Las Vegas, Nevada.
Shout out to Vegas in the building.
Whoop, whoop.
Are you a mom?
I am.
Well, happy belated Mother's Day.
Appreciate it.
You're welcome. And happy belated Mother's Day to all the mothers in the chat. If you're a mom in the chat, put some flowers in the chat right now for all the mothers, right? Fellas, give them some flowers too. So what's going on, Nina? Talk to us.
Quick question for you. I don't know if I'm barking up the wrong tree, but I currently have a rental property, my husband and I want to sell it. We're sitting on over $90,000 in equity, and I want to sell it to our nephew.
Okay.
But there would have to be some type of creative financing for him.
Okay.
So I'm debating if I may even want to go that route in helping him to do the creative financing.
Why? Why don't you want to go that route?
Because it's going to take time versus me putting it on the market with people that are already approved.
Is he able to get approved or no?
No.
Look, I'm going to tell you like this. This is just me speaking, and this is my opinion. I'm not waiting for nobody to get their ish together. I don't care who you are. Me personally. Look,
right.
I have the property. I would love to keep it in the family, but my personal goals are to get rid of this so I can level up. Right? And if you're not in that position to act on this, then what can I do? Right? You can't stop your grind. You know, and the market can shift at any moment where now that 90K could be 50K. So I'm just not a fan of waiting for nobody. I'm impatient. Right. And I look at it as if you know you want to be in real estate, you should have been doing everything you needed to do to get yourself together to put yourself in position to buy. So me personally, I would not wait for no nephew, cousin, sister, brother, hell, mother. Nobody.
Well, that's what I'm thinking about, because being in EYL, I already know
Shout
some.
out to all the earners. I love it.
Right. So that's of course how I came to you, but I'm changing my whole trajectory on everything. And we've owned the house from build out, and I did the numbers with what we're getting in profit in rental is not worth it. It would take us over 10 years, you know what I mean, to get where we are with the equity. So it's pointless in holding on to it and not to be emotionally attached to it. So my husband and I are done with it. It's better just to sell it and get that profit and do something else with it.
No, that's a fact, right? If it's not cash flowing to where it needs to make sense, because look, that's the thing. A lot of people buy real estate wrong. And a lot of people I come across, they just have these rental properties like, your numbers are terrible. Like, why did you even buy this? But people don't know, right? And
Right.
that's why I love EYL University. And shout out to Rashad and Troy and everybody over at Earn Your Leisure, because this platform has now opened it up to where now people are now seeing this firsthand and seeing the information and being able to talk to people that are experienced, that know what they're doing. And now it's not just the people like myself who are experienced teaching, it's other earners that are in the group that have the experience and they're sharing their knowledge with the community. So if you're not a part of EYL University, me personally, I think you're doing yourself a tremendous disservice because it's almost free, right?
I
Like,
agree.
I don't even know how much it is. I think it's like $600-700 for a year. I mean, you're talking about $60-70 a month. What it boils down to for the amount of information that you're receiving is absolutely insane. Now, you just said something, right? You said since you came a part of EYL, it's changed your guys' whole mindset. Like, can you elaborate a little bit on that? Talk to us. How has Earn Your Leisure University helped you and your husband change your mindset?
Well, for one, I'm excited. I fired my employer, and that's
Mm,
specifically because, but it's helped to fire my employer and turn my mindset into what else can I do, which is options trading. So I'm into that now. It's given me another thought on where to get income from. Do you know what I mean? If that makes sense. So we've always been business people, and I used to be a realtor, so I know about real estate. I used to do taxes, so I know a little bit about taxes. So I always say I'm a jack of all trades, a master in education, because I want to know a little bit about everything, so someone just can't tell me anything, and I have no clue what they're talking about. With that being said, even though I have that little bit of education, UYL's has helped expand it. For example, being house rich, bank account poor, right? So I'm sitting here thinking about that statement I believe you made, and it's like we basically are house rich because our current home has over 100,000 equity too, right? So
mm,
why are we sitting on all this money that's not growing? That's not
mm,
doing anything for us. So since EYL, I purchased stock. I purchased some options trading and REIT. So that's how it helped us and helped me. I'm a mother of four children. The oldest is 30, 27, 20, 14 boys. With that being
mm,
said, I'm able to share with them our brown boys, black boys, as far as how to educate them in investing, which we've already known, like I said, about investing, but to help expand on it. So our 20-year-old, who's a full-time student at Delaware State University, he quit his job because he wants to return to school, but his mind is going to be going into options trading. He wants to learn now too how to do it. So it's passing it down to our family and the generational wealth that's always mentioned is what I'm working on. We've been working on it, but it's just expanded and pushed it a little faster with what we should be doing, what we need to do.
wow, that's amazing.
Thanks to
So
you
you,
guys.
wow, that is amazing. That was a powerful testimony right there. I hope everybody in this comments was paying attention to everything you just said, because the fact that you just said that just from you being an earner, now it's impacted your three grown boys, right? And now the baby boy that's coming behind. Like that's in that. I think you said 14, right?
He's 14, and I for his birthday I made him open up a stock account. So he was actually bugging like, "Well, mom, where's my stock?" So, and then the teenager, he was working because he wanted a job and has all this money saved up. He needs to invest as well.
Wow, that's amazing. And now you take everything that you learn and teaching them, and now they're hip to everything.
Right. And to add on, my husband's a barber in Vegas, so of course, he is information station, so he's sharing it with his clients, and of course, sharing with you on the importance of home buying. But they're able to relate because you guys keep it so 100 in real, right?
Wow. So
Which
now
makes
he's in the
more
barber.
fun.
Now he's in the barber shop playing on your leisure stuff.
You got it. And people are like, wait a minute, what is this? And they're relating to it.
Damn, that's powerful. Damn, that's powerful.
Thanks to you
Look,
guys.
look, I love everything that you just said. I want to give all your boys a scholarship to EYL University.
Oh, cool. Really?
Yeah, I'm dead serious. I want to make sure that all four of your boys are earners, right?
I
I
love
want them
it.
to have their own access, their own logins. Like, I want them to join the Facebook group. I want them to be on Market Monday Zoom calls. I want them to be on the Wednesday classes. I want them to be on my real estate break bread classes. I want them to be a part of the financial planning call once a month with Rashad. I want them to be a part of the book club with Troy every other Sunday. I want to make sure that your boys could continue what you started for your family. And if I'll give them a scholarship, you can email Janet, or
Okay.
you can. Do you have Janet's email?
I normally message her on Facebook, but she always replies.
Message her on Facebook, Nina, and tell her, or put like in a group message with me, Janet. 'Cause I think you could do that on Facebook, right? You can have like a group text on
I think
Facebook.
so. I'll try it.
So do a group text with me, Janet, and you on there, and say, "Hey, this is me, Nina, from the live for the scholarship for my boys." And make sure you give me their full names and their email addresses, and I'll add them. I'll get them on ASAP.
I greatly appreciate it, and shout out. I know I'm not East Coast, but I love East Coast energy. You guys are real and supportive. West Coast is a little bit different, but all the love that you guys show, I love it. So I greatly appreciate it.
No, we appreciate you and your support, and I mean that just means a lot just to see from different age groups, from 30 to 14, black boys that now you turned them on. So now that you turned them on, we're gonna help put gasoline on that already burning fire, and hopefully it'll help them create wealth for their family and their kids, and we can keep that cycle going within our community, man. We gotta bridge this wealth gap.
Yeah,
So
thank you.
that's Earn Your Leisure's Mother's Day gift to you.
Appreciate it. Greatly appreciate it. Thank you.
You're welcome. No
Thank
problem.
you for
Send that
taking
group
my
text.
question.
Huh?
Thank you for taking my question.
No, thank you for sharing your testimony. Thank you
You're
very much. I
welcome.
really appreciate that.
Thank you.
Shout out to all my earners in the building, all right? Shout out to all the damn earners in the building. Throw that graduation cap in the comments right there. Somebody said something about DJ Envy. Put that up. What that say? Congratulations. I can't see now, bro. It says, congratulations to you, MG the Mortgage Guy. Met you in Atlanta at the DJ Envy event. Tiffany, shout out to you. I appreciate you. Shout out to my bros, DJ Envy, Flipping New Jersey. We're coming to Charlotte, June 20th. Charlotte, June 20th. And we're coming to Houston, July. Damn, don't get me lying to you. July 14th, I believe. Let me check. Hold on, because I want to make sure I get that right. We're coming to, let me go to Envy's page real quick. We're coming to Charlotte. Hold on, let me get this right. All right, so Charlotte, stay tuned. DJ Envy, Flipping New Jersey. We're coming to you June 20th, okay? Houston, July 18th. And we have the car show, DJ Envy's Drive Your Dreams car show. That's July 4th weekend in Atlanta, all right? And it's going to be July 3rd. The car show going to be bonkers. Y'all definitely need to pop up to that, all right? So there we go. Shout out to my bros, Envy and Caesar. Nothing but love for them from start to flip team. How long we been on this joint? 60 minutes right now? We've been on this thing for 60 minutes right now. Let's take another question. I got to get the hell out of here.
Sibo back.
Huh?
Sibo.
Sibo? Yeah. Let's get Sibo back. Yo, we need more likes.
What's up, man? Y'all can hear me?
Yo, Sibo. Yeah, much better,
Whoa,
bro.
what's up, man? What's up, man? Oh, okay.
What's
that's
going
a
on,
lot
Playboy?
better. Okay.
Much better,
What's
bro. Much
happening,
better.
man?
I'm good, bro. Where you from?
Okay. Hey, bro. I've been following your lead, bro. I've been following you for like over a year, and at this point, I have a full unit, a full family, as y'all say in New York, a full family And I'm wondering when can I like I've been having it since I closed on it on January the 29th. I'm wondering when can I it's the soonest that I can refinance.
When did you close?
That's the first question I January 29th.
Of 2021?
Yeah, this year.
Congratulations, bro. Congratulations, man. Make 6 payments first. Once you make your 6 payments, yeah, then you can get into refinancing.
Okay. And also my next question has to do with since I done got into this realm, I just started thinking about it. Like I'm just wondering if you give me any information on like what does the tax situation look like when you house hacking? Like at the end of the year, when it's time to pay taxes.
Well, you have a 4-family, so from a tax perspective, you're going to be able to write off a lot. Because when you guys, and this is why multi-family ownership is better, so to speak, than single family ownership, because you can write off more, right? Because now you have that rental income, right? And now when IRS, they're now looking at you as a business because now you're going to file what's called a Schedule E on your taxes, right? So now you're going to be able to write off more.
So that I got an FHA.
Yeah, I mean, the type of loan that you have doesn't matter.
Okay.
You can have a conventional loan in a multifamily. It wouldn't matter, right? It's just from a tax perspective, you'll be able to write off more on your taxes because you have a multifamily owner-occupied investment property. So you'll get tax-wise, you're going to be happy when you do your taxes. But I'm not a CPA. I'm not a tax professional. That is my disclaimer.
Right.
I can't give you tax advice. I can give you loan advice. You know what I'm saying? But just from me knowing, you're going to be happy come tax season.
Okay, so look, I'm trying to build my portfolio. Like, I see the power of this whole industry now, and it's mostly coming from following you. And I really I want to refinance this property and I want to get something else. Like, my whole idea at the first was like to follow your 4-3-2-1 strategy. I know I might have to wait longer to get the next 3, but that's why I was wondering when I could refinance. Like I could even I could refinance this one right now, and I see a lot of like single families that's on the market right now that I be feeling like just jumping into. But I want to stick to the code.
Well, let me tell you this, right?
My question about that was,
you're breaking up a little bit, bro.
Mm-hmm.
Yeah, now I hear you. So let me tell you this: if you go from 4 to 1, is there going to be enough cash flow coming in to pay for your 1?
Well, the 1 was to be just like I was going to do conventional on that. Rent it out.
You was going what? Yeah,
I was going to just do it conventionally and just pay the 20%.
Oh, you was going to do a
I was planning on doing like a conventional loan on the 1 family. Yeah.
Yeah, that could work. That could work.
Get some more rental. Okay,
yeah,
and I can still refinance this 4 family.
Absolutely.
Okay. So that's exactly what I'm doing. You say I have to make 6 payments. I done made like 3 already.
Yeah. So once you get 6 payments, then you can start looking into refinancing. But with a 4 family, if you want to refinance out of that FHA into a conventional, you're going to need at least 20% equity.
Mm-hmm.
So you got to make sure
you're
not going to have enough.
I did this I got a 2 or 3K loan.
So you did a 2 or 3K.
Yeah, and I got 31 grand in equity already in it.
What's your rate? What's your interest rate?
3.8.
So you can probably do a streamline. You won't be able to get out of FHA.
Interest rate is 3.8%.
All right, so if you got a 3.8, then I would recommend doing the FHA streamline because you don't have enough equity to get out of FHA right now. But if you do a FHA streamline, you'll be able to refinance without an appraisal, without any income documents, and you could drop your rate probably to like 2.875 today. So in 3 more months, you should look into doing the FHA streamline refinance.
Oh,
All right, bro, you're in the matrix right now, man. You kind of
man, I
frozen
appreciate
again.
it. I appreciate you. Gave me
So
a lot of clarity.
no problem, bro. No problem. Anything I can do to help, I'm here, man. Text the number if you got any more questions. Me and my team would love to help you. All right, bro. Let's go to the next one because he's in the matrix right now.
Will do. Appreciate you. Later.
Thank you, King. Sibo, I appreciate you, my brother. Shonda Hudson, thank you for the super chat. We really appreciate the super chats here at the channel. We invest a lot into equipment, so it definitely helps. There was another super chat. I want to shout somebody else out with the super chat. You just passed it. He got a long question, too. Bro, you got to make this a little bit bigger for me. Pause. Like, because I can't see. All right, that's much better.
How you gonna see it?
Damn it. We got to figure this system out. Like, all right, so what he says? All right, so under pre-approval, conditional approval, what is considered a large deposit when it comes to my bank account? Looking at homes in ATL from BK. What's this person's name?
Lola, it's Bronx, by the way.
Lola. Shout out to you, Lola. Lola1219, thank you for the super chat. That is a great way actually for you guys so I can see your questions. It's just a super chat because it comes up bright and all this other good stuff. But large deposits are really dependent on your income and how much you make a year. So but typically, if you're depositing, $1,000, $2,000, underwriting could determine that as a large deposit. So what I tell people all the time is, look, you should have one account that you're using for your real estate transaction, and your other account should be for everything else. So that way, when you're submitting your paperwork to the bank, you're only submitting that real estate. Like I have one of my accounts, I call it real estate fund. It's a savings account, right? It's actually with Capital One, and it has good interest. But this is where I keep my money for all my real estate deals. So the only transactions that go there are direct deposits from my paycheck, and also transfers from my checking account. That's the account that I use for all my real estate funds. Now, if you know you're gonna have cash going in, you need to put that in another account that we don't see, and hopefully you don't need that cash to qualify for the loan or complete the transaction. But you gotta separate your accounts. But large deposits, to answer your question directly, is really dependent on how much income you're showing, and that's what underwriting is going to really look at to determine what's considered a large deposit or not. But anything over $1,000 is probably going to consider a large deposit. But holla at me, Lola. I would love to help you. I live in Georgia, and I'm in New York. All right, so who's this? Erica Williams. Shout out to Erica. Put her back up there. Shout out to, I like when you highlight it like that. That's actually much better. Shout out to Erica Williams, the classy clown herself. Thank you, Erica. She says, I'm so proud of you. Get it. What advice do you have for people relocating to another state to get pre-approved? First of all, if y'all not following Erica Williams on YouTube, y'all need to go over to her channel, go to her Instagram page. Erica is a beast, okay, with a capital mother effing B. You will thank me later, all right? Erica's a beast. Go follow her. Now, and subscribe to her channel, okay? Now, relocating, I would say, obviously getting pre-approved is the first and foremost thing that you want to do. Buying out of state, it could be difficult, especially if you're not traveling back and forth to that state. So having team and boots on the ground is probably the best advice I can give you. You got to have a good realtor or a good wholesaler in the state that you're looking to relocate to you, because FaceTime and Zoom virtual walkthroughs are like real right now, and I do a lot of virtual walkthroughs on homes out of state. And you got to have a technology savvy realtor or wholesaler. for that, because some realtors are just, they outdated, they're old, they don't want to do any of that stuff, right? They're old school. But a lot of realtors that I work with out of state for my personal investments, I get a Zoom link of a complete walkthrough when they're breaking it down, or we get on FaceTime and we do the walkthrough that way. So that's one of the best advice I can give you. Have a realtor by your side or a wholesaler by your side that uses technology, because it makes it easier to view homes. And make sure you trust them, right? Because sometimes they gotta know what you like. They gotta have that relationship so they know what you would like to see and what you wouldn't like to see. But if you're not comfortable with that, the best advice I can give you on top of that is go to the state, visit, go smell the dirt, go drive around the neighborhoods. Some people can't do that. They need to be there. So plane tickets are cheap. You can book a week stay anywhere. You can get an Airbnb and kind of hang out in the area that you want to live in, so that way you can home shop that way. So that would probably be some of the advice that I would give to people, especially if you're investing out of state. Before you invest, I really feel like you should go to these areas. A lot of people talk about Cleveland, talk about all these other places, Detroit, but never been. But they talking about they want to invest there. Like that, I think is the wrong move. You need to go there and view the properties and get to know these areas, man, and start building your team in these areas. But make sure y'all go follow Erica, man. Erica Williams, she's a beast with a capital B. She's out here killing trucking, real estate, and everything else with business. All right, who's that? That looks like a long question. That looks like a long question. Who is this? What's their name? Harold Whitty with the paragraph. All right, so what they say, if you buy a fixer-upper multifamily, does 75% of the rental income for the additional units is appraised at the value as the current state at the time of purchase, a maximum value? What? Yo, you rambling with this question. But I think you're trying to say, are we using 75% of the rental income to help you qualify? Yeah, on FHA loans. You can use 75% of the rental income to help you qualify. Like the appraised value doesn't have nothing to do with rental income, right? So when underwriters are looking at rental income, we're always going to look at the lowest of the two, either market or current lease, right? So if your lease, let's just say, is $1,000 per unit, but the appraiser comes back and says the market is $750, then we're going to use $750 per unit times 75% of that to help you qualify. So rental income, always the lower of the two, either market rent or lease. All right, who we got next? We went on this journey for an hour and 12 minutes. We're about to end this soon.
I gotta go to Best Buy.
Oh, we gotta go to Best Buy too. We gotta go get some more stuff for this. So we're gonna take one more question and then we out of here. Do I work with people in Illinois? Yes, I do. Link in the description to apply. So here are the states that I personally work in, me and my team, okay? Anywhere from New York to Florida, Texas, Colorado, California, Washington State, Illinois, Massachusetts, Rhode Island, Tennessee. Yeah, that's it. Holla at me. Let's do business. All right, what we got?
I'm just scrolling up. We got some new shit.
Somebody said, what's Erica's IG? We already told you that. Can I do Philadelphia? Yes, I can. We are in Philly. Illinois. Yes. New York, New Jersey, Connecticut, Philly, DMV, South, North Carolina, Georgia.
Tips for a new loan officer?
What?
Top 3 tips for a new loan officer?
Top 3 tips for a loan officer. Oh, man. Top 3 tips for a loan officer. Number 1, join MG Mortgage Academy. That's number 1. So you can get more than 3 tips. Go to my Instagram page and click the link in my bio to get on the waiting list. I'm only accepting 100 mentees when the program launches in June, but the link to sign up will be sent out to everybody next week. All right? That's number 1 tip. Number 2, become a guideline GOAT. Learn your guidelines. A lot of people out here just want to go out here and sell, 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 but don't know ish. Learn your guidelines. And number 3, do not get discouraged, right? This business is hard. It's just some of us make it look easy, but it's not easy. It is extremely hard. It is very difficult, especially for a new loan officer who doesn't have a book of business or a spare influence that they can get business from right away. But don't get discouraged. That should have probably been number 1. Honestly, don't get discouraged. Keep your head down. If I would have listened to the people 15 years ago who told me I shouldn't do this, you shouldn't be all commission, blah, 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 I would not be here today with 1 million views on my YouTube channel and toured the country and spoke to almost 30-something thousand people live about real estate financing. It's because I didn't give up. I didn't get discouraged. And even when I was discouraged and I wanted to give up, I kept fighting. I kept on pushing because I knew there was something greater for me. And I knew this business was lucrative. And I knew nothing I could do, because I had no college degree, could pay me like this business. So I kept my head down, and I didn't worry about the money at first, although the money came fast because of the time I came in, but I didn't care about the money. I still don't really care about the money to this day, which is so crazy. The money is the cherry on top. I just wanted to just be successful, if that made sense. You know, I didn't want to be in the hood no more. So don't get discouraged, man. Don't listen to people. That'll be the top 3.
Another super chat here.
Okay. Super chat. Shout out to Harold Whitty. You're back. Okay. So Fixer Upper Multifamily does 75% of the rental income. Well, he said this already. I just answered this one. But he just super chatted it. I answered this already. Harold, I hope you caught that. No problem. Okay, the number for the blueprint again. Text the word blueprint to 516-217-2291. 516-217-2291. Get 80% off the Home Buyers Blueprint Volume 1. Okay? Volume 2 pre-sale will start Wednesday. Okay? All blueprint and earners will get the pre-sale price on that for life. Okay, he says, no, I'm asking what? No, I'm asking our day going to 75 using... Yo, Harold, just get on the live with me, bro, because I don't know what you're asking me right now. Harold, jump on the live so that I can really, because I need to talk to you. No, I'm asking, our day going to...
I'm asking, are they going to use 75%?
He says, are they? That's his day, like the day of the week.
Yeah, but he's probably, like, that's what he's trying to say.
Oh, he's something like they, THEY, they?
Are they going to use 75% in its current state of 75% after the rehab?
Yes, we're going to use 75% of either the market or the current lease, whatever's lower. So if the market, even the house is not rehabbed, right? It's going to go off what the market is for that current state of that apartment.
Are they going to rent for more after the rehab?
No, we don't know what they're going to rent for. Unless the appraiser says that these houses, if you do a 2 or 3K and they say these apartments market after rehab will be $500 more, then we're still going to use the lower of the two, either the current lease or the market. 516-217-2291. Text the word blueprint. It's on the little ticker thing. It's going across the screen, guys. If you want to get 80% off the blueprint, look at the ticker that's below me right now. You'll see it. Prudent Mom, shout out to you. All right, who else we got? What time is it? 1:19. An hour and 20 minutes we've been on here, man. We came on here to celebrate 1 million views on my YouTube channel. I appreciate all of y'all for the love and the support. Like I said, please like the video. There was a lot of good questions in this segment today. So please, please, please rewind this, take some notes. Again, all my earners, we're at ATL this week. We got a special networking event for all EYL University members. All EYL University members, you're gonna get the link. The link. You're gonna get the details on EYL private Facebook group, probably today or tomorrow. It's gonna be emailed to you. It's gonna be text to you. So if you're in ATL or the surrounding areas, pull up to us on Wednesday. All right. Homebuyers Blueprint Volume 2, pre-sale Wednesday. All right. That course is dropping next Tuesday. What else we got going on? Volume 1, y'all see the ticker below me. Text Blueprint to 516-217-2291. What else? That gives you 80% off the Homebuyers Blueprint. I'm so excited for Volume 2, though, man. I'm so excited for Volume 2. Everybody who's a Blueprint, part of the Blueprint family, and EYL University will get the pre-sale price for life. And I'm telling you, when I start having those live calls with hard money lenders and construction, the permanent lenders, I'm giving y'all the lenders in this. It's going to be phenomenal, y'all. So, again, thank you all for 1 million views on my channel. I sincerely appreciate every single last one of y'all for tapping in with me all the time. Oh, we got another super chat. I'm about to get off. All right. Who's this? All right, Miss Southern Gal. Shout out to you. All right, so thank you for the super chat. Really appreciate you. So do you have any experience working with travel nurses? Yes, I do. We are W-2 employees, but sometimes we work with different companies, and some of the nurses are saying they are having a hard time getting approved. You know what I'm going to do? Yes, that is very true. I'm going to do a special video here on YouTube. We're going to do a YouTube live. You know what? Let's do that tomorrow. Tomorrow, tune in. Live at 5. Tune in tomorrow, 5 p.m. Eastern Standard Time. What was her name again? Miss Southern Girl? Thank you, Miss Southern Girl, because I get this all the time from my nurse crew, especially my traveling nurses. We're going to do a special YouTube live tomorrow for all the traveling nurses out there, all right? I'm going to break all of this down, show you how you got to get qualified for loans with all these different sources of income, et cetera, all right? So tomorrow, 5 p.m. Eastern Standard Time, tap in with that. Traveling nurses, I got something for y'all because y'all super essential. And y'all got some money over the past year. It's been a pandemic for the nurses. I ain't going to hold y'all up. It is well-deserved. So let me show y'all how to get this real estate going. All right, who's this with the super chat? What's their name? Tony Latoya. No, that don't say Latoya. It does. Okay, see, it was a little too small. I can see now. Okay, so Tony, sorry for butchering your name. Thank you for the super chat. I appreciate you. I'm having a hard time finding a fourplex in Chicago. Do you suggest anything close or secondary markets to get the best COC? I'm willing to leave Chicago. Well, look, Chicago market is on fire. I've been looking in Chicago, and I'm having a hard time too. But I can tell you there's a lot of deals in Chicago. I can connect you with my realtor, Tony, and maybe she can help you find something. Like as far as markets and everything, I'm learning, but I wouldn't probably feel comfortable with giving you advice of what markets to go for. Either which way, I can lend in Chicago, so I would love to help you with financing, and I'll give you the blueprint and show you how to build up this portfolio. But, text me, Tony, 516-217-2291, and then that way I can connect you with my realtor. Because, again, it's all about your realtors also. And I find in Chicago, a lot of realtors don't know what the hell they're doing. But I've amassed a good team in Chicago that are investors themselves, so they know exactly what to look for. So I can definitely plug you in and get you right, Tony. So text me, Tony, and tell me you Tony from Chicago who want the 4 family, and we'll start working ASAP. We'll get you that 4 family. 516-217-2291, Tony. And thank you again for the super chat. Yeah, super chats are the best way to get your questions seen because it gets highlighted. So if you don't want to come on, you can super chat your life away. All right, we back. What's the guidelines with StreamYard for next week, fam? I don't know what you mean by that. Okay. That's what we got. We're going to do traveling nurses tomorrow, and that's it. So, again, thank you guys. We've been on here almost an hour and 30 minutes. What's the APR for a loan? Nah, that's too much to talk about. Can you get a no-doc loan? I don't know. I don't know your situation. You got to tell me more information. Most likely you can if you got the down payment. 1 million views, guys. Now the goal is to get 1 million views in 1 month. All right. Only can pay through Google for super chat. Nah, you can cash at me too. MG the Mortgage Guy. $ MG the Mortgage Guy. I accept all forms of love. You know what I'm saying?
Not for super chat.
Huh?
Not for super chat.
Well, they can do fucking cash app too.
How are you gonna cash app you with super chat?
No, they can cash app. She said only can pay through Google for super chat. Oh, I see, I can't see that shit. I misread it. I had to look at your screen.
Yeah, you're asking if you can only pay through Google for super chat.
Yeah, I don't know. I guess so, yeah. You got to hit that little, in the comment button, it'll be like a little $ or something like that right there.
What is it? Cash app, I'm done.
That's what I thought she said, Cash App. I'm like, what? Whatever. Well, the Cash App's in the comments now. Feel free to Cash App your life away, super chat your life away, whatever you want to do to support MG the Mortgage Guy, because I accept all forms of love, all right? Again, I appreciate all y'all, man. It's been a great Q&A session. I said I was going to come in here for 30 minutes, but that was a lie. You trying to send a question? Yeah, send a question. I'll wait for you. Or just jump on live. Forget sending a question. Jump on live. Somebody said they're about to get lit tonight. What am I sipping? I'm drinking wine. I'm too old for hard liquor right now. Hard liquor don't agree with me. So I'm all about that red wine. And that's exactly what I'm gonna have tonight while I'm watching Market Mondays. Make sure y'all tap into Market Mondays tonight on Earn Your Leisure's page also. 8 p.m. Eastern Standard Time if you want to know about the stock market, options, crypto, futures, long-term buy and hold stocks. Market Monday, 8 p.m. Eastern Standard Time over on Earn Your Leisure's page. Look, they're in Atlanta right now. You never know who's going to pop up. So that's all I'm going to say, because I was on FaceTime with them today, and it was with some heavy hitters. I would tune in. All right, so if you want to know about Isaiah qualifications, all that stuff, go ahead and get the Homebuyers Blueprint Volume 1. All right? Homebuyers Blueprint Volume 1 will teach you everything you need to know. Do LO typically use the middle of general scores? Yes, we use the mid score. So when qualifying for a mortgage, you know, you guys, you have 3 credit scores: Experian, Equifax, and TransUnion. So if Experian is 700, TransUnion is 650, and Equifax is 675, then we're going to use Equifax to 675 for qualifying purposes. Now, if there are 2 people on the mortgage, okay, we're going to use the lower of those 2 middle scores, okay? We never used, if there's more than 1 borrower, we never use the highest middle score. We're always going to use the lowest of the middle scores, all right? So I hope that answered your question as well, okay? Hit the like button, people. Hit the like button, people. Smash the like button, people. And I appreciate the love, the support, and everything that you guys do. Tap into the movements. Yeah. I think that's all I got for them right now, Tokes. Oh, we got to go to Best Buy. We got equipment to buy before this shit closes. My bad. I'm over here rambling. I'm ranting right now, and we got to go to Best Buy and go buy more expensive shit for this studio. But it's well worth it. So, look, I got to get out of here. Sorry. It's been 90 minutes. I hope you enjoyed this. Salute to all of y'all earners. Stay tuned. We got the event on Wednesday in Atlanta, only for EYL community. If you're not at EYL University, link will be in the description to sign up. And yeah, tomorrow we're talking about traveling nurses. So tap back in. Peace.
It's Mad G. Making moves, flipping real estate. We building wealth, get your minds right and elevate. It's the mortgage king, we do it truly, bro. Dropping gems like a thief up in the jewelry cell. Wealth building equity in real estate, the mission. Collaboration is greater than